Most people think Dutch taxes are complicated and scary,
But today, I'll explain how income tax in the Netherlands works in 2025, using real numbers and real examples that affect most people. If you work or live in the Netherlands, the main tax you deal with is income tax in Box 1. This includes salary, freelance income, pensions, and income related to your home. For the 2025 tax year, Box 1 has three income tax brackets. Income up to €38,441 is taxed at 35.82%. Income between €38,441 and €76,817 is taxed at 37.48%, and income above that is taxed at 49.5%. These are the headline tax rates. But here is the most important thing many people don't understand. These are not the rates you actually end up paying. In the Netherlands, tax credits reduce your total tax bill directly. That means real euros off the amount you owe. The first one is the general tax credit. In 2025, this credit can be worth up to about €3,000, depending on your income. The second important one is the employment tax credit. If you work, this credit can be worth up to around €5,600. Together, these two credits alone can reduce your tax bill by several thousand euros. Let's look at a simple example. If you earn €48,000 per year, the tax before credits might look very high. But once you subtract the general tax credit and the employment tax credit, your final tax bill can drop to around €9,000. That means your effective tax rate is closer to 19%, not 37 or 49. Even with a salary of €60,000, the effective tax rate is often closer to 28%. This is why understanding credits is so important. Now let's talk about deductions that many people can actually use. If you own a home, mortgage interest is usually deductible in Box 1. Certain medical expenses can also be deductible if they pass the minimum threshold. And charitable donations can reduce your taxable income if they meet the rules. For employees, most work expenses are no longer directly deductible. Instead, many costs are covered through tax-free allowances paid by the employer. If you are an expat, you may have heard about the 30% ruling. This can allow part of your salary to be paid tax-free if you qualify. But starting in 2025, the partial non-resident status has been removed. That means some expats may now pay tax in Box 3 on worldwide savings and investments. The key takeaway is simple. Don't focus only on tax rates. Tax credits and deductions are what really determine how much tax you pay. Once you understand this logic, Dutch taxes become much more predictable and much less stressful. Follow this channel for more practical explanations about taxes, money, and life in the Netherlands.